So good day. I welcome you to Duahbed Consult platform once again. So today's session will be on preparation of balance sheet statement using classified balance sheet approach or classified balance sheet method. So we know that for balance sheet format, we have horizontal format and then vertical format. So horizontal format. We start with non-current assets. After that, you record your current assets. So the total of the current assets and the non-current assets will give you total assets. And then the credit side too, we have the stated capital as aspect, that's the finance by aspect. So finance by, you have your capital, you add net profit, and you less drawings. After that, you record your current liability. Record your current liabilities and then the long term, and then the long term liability. Then this will give you the capital employed. Capital employed. That's the horizontal format. And then for the vertical format, you start with your non-current assets. And then you record your current assets. After that, you subtract the current liabilities from the current assets. So let current liability. And then the difference will give you working capital. And then you add it to non-current assets to give you net assets. After that, you proceed with the finance by aspect. And then you record the stated capital. So the stated capital is made up of your capital, reserve, and then the net profit. So you record your stated capital. And then you record the long-term liability or liability. So stated capital plus long-term liabilities will also give you the capital employed. Now, when it comes to classified balance sheet approach is quite different from this. Although we're recording the same item, but we just change the positions. So for classified balance sheet, classified balance sheet method, instead of starting with a non-current asset, you rather start with current asset. So you start with current asset. And then you record the various current assets that we have. So after that, you add non-current asset. Non-current asset. you add your non-current assets, and then that will give you your total asset. So after this, we proceed with liabilities and then shareholders' equity. Liabilities and shareholders' equity, which is the same as financed by. So over here too, instead of you to start with the stated capital, after that the long-term liabilities, you just start with your current liability first. So record your current liability. So after recording your current liabilities, you record your long-term liability, which is the same as non-current liability. So non-current liability. Non-current liability. So current liability plus non-current liabilities will give you total liability. This will give you your total liability. So this is your total liabilities. So after getting your total liability, then you proceed with shareholders and equity. So shareholders and equity. So at the shareholders and equity, then you calculate the number of shares, that the stated capital, the retained earnings, and then the number of reserves that organization are having, they are the same as the surpluses. So in case the organization are having a general reserves, we report retained earnings. Retained earnings, which is the same as income surplus, we report. Now you report the stated capital as well. And I record the stated capital as well. So after that, you sum them up and then report the total figure at the second currency sign column. So the shareholders' equity total plus the total liabilities will give you capital employed. Will give you the capital employed, which is the same as total liabilities and then shareholders' equity. So that will give you total liabilities and shareholders' equity. So this is the format of classified balance sheet. It's the same as the one that we use now, but just that over here you are just changing the positions of some of the items. So you solve practical question to see how it works. And I read the question. The following items are included in the financial statement of RAFCO for 2019. Account payables 37,500. Account receivables 27,500. Accumulated depreciation for video equipment 70,000. Advertising expense 52,500. Cash 60,000. Common stock, which is the same as shares, 225,000. Depreciation expense 30,000. Dividend 37,500. Insurance expense 7,500. Note payable due 2020, which is 175,000. Prepaid insurance 15,000. Rent expense 42,500. Retained earnings, that's the opening balance 30,000. We have salary expense 85,000. Salaries payable 7,500. Service revenue is the same as sales, which is 362,500. Supplies, that's the stock, 10,000. Supplies expense, which is 15,000. And then video equipment, 525,000. So we are required to first calculate for the net profit for the year, and then the retained earnings that's supposed to appear on the balance sheet. That's the retained earnings at the end of the accounting year. And also prepare balance sheet statement using classified balance sheet, assuming that the note payable is a long-term liability. So we start with the preparation of the income statement. So we prepare the income statement first. That's the first requirement. Okay, so in the book of RAFCO, so first requirement, that's the income statement for the year ended 31st December 2023. So income statement, year ended. So the year ended 31st December 2019. So for the income statement, it's the same as the trading profit and all that we know. That's the difference between your revenue and your expenses. So in this question particular, the only revenue that the organization is having is service revenue. So you start by recording your service revenue. So service revenue. And then the amount of service revenue is 362,500. So service revenue, that's 362,500. So the normal trading profit and all that after you are done recording your sales, you less your returns inward. But over here there is no returns inward. So this will also serve as our next step. So after that, you proceed with less cost of sales. So we proceed with less cost of sales. So you start with opening stock, you add your purchases, you less purchases returns. If there is a carriage on purchases, you add. But over here, the only item that you have that will fall under cost of sales is the supply expense. So that will be the only cost of sales item. That's supply expense. And then the supply expense is 85,000. So the difference between this and this will give you the gross profit. So we have your gross profit. So 362,500 minus 85,000 will give you a gross profit of 277,500. So after you are done getting your gross profit, you add other income. But in this question, you don't have any other income. So you less operating expenses or less the remaining expenses. So less expenses. So for the expenses, we have advertising expense. Advertising expense, which is 52,500. 52,500. And then the next expenses, insurance expense, which is 75,000. We have insurance expense. And then the next expenses, rent expenses. So rent expenses, you got 42,500. 42,500. The net expenses, salaries expense. Salaries expense. So salaries expense, 85,000. Okay, so sorry, the supply expense is right at 15,000 instead of 85,000. It's right at 15,000. It's right at 15,000, not 85,000. So the gross profit will be, so the gross profit will be 347,500. So after recording the salary expense, you calculate the depreciation charge. That's the depreciation expense. And then the amount of depreciation expense is 30,000. Don't forget that there is a difference between depreciation and then accumulated depreciation. So depreciation expense is what we treat when we are preparing trading profit and loss account. And then accumulated depreciation, that's the summation of all the depreciation charge over the years. For accumulated depreciation, you learn it from the cost of the fixed assets when you are preparing your balance sheet statement. So that's we are now recording the expense. So we sum the expenses up to get your total expenses. So total expenses will be 217,500. So the difference between the gross profit and then total expenses will give us the net profit for the year. And then that will be 130,000. That's the net profit. Okay, so normally when we are preparing trading profit and loss account, whenever there is an prepaid expense and then accrued expense, for prepaid expense we will add, and then for accrued expense we will less as well. But over here, since the prepaid expenses, for example, prepaid insurance, we didn't treat it in the trading profit and loss account or the income statement. This reason is because since the prepaid expense it has been given to us in the trial balance, it means that the organization has already made the adjustment already. But in case the prepaid expense or insurance prepaid was given to us in the footnote, so since it is in the footnote, it means that the organization are here to make adjustment to the expense account or the insurance amount. So since it's in the trial balance, means that we are done doing the adjustments already. So there is no need for you to deduct the insurance prepaid from the insurance expense. Okay, so the second requirement is the total amount of retained earnings that will be recorded in the preparation of the balance sheet. So retained earnings is the same as income surplus. So you know that whenever the organization makes profit, they pay part of the profit as a dividend to the shareholders. So the remaining amount of profit, the organization will turn it or record it in the retained earnings or the income surplus account. So this is how. So the next requirement is we are coming to determine the retained earnings balance that should be recorded in the balance sheet statement. So that B, income surplus account. So you start by recording the opening balance that was given to you in the trial balance. So retained earnings as 31st December 2019. And then the opening balance was given to us in the trial balance at 30,000. So 30,000. And the organization make profit of 130,000. So add net profit, which is 130,000. So 130,000 plus 30,000 will give you 150,000. So from the question, the organization paid dividends of 37,500. So you less the dividend. So dividend, less dividends, which is 37,500. So 37,500. So the difference between 160,000 and 37,500 will give us the closing balance for retained earnings. And then that will give us 122,500. 122,500. So retained earnings. So retained earnings for the year, that's 122,500. So this is the amount that you will show when you are preparing your classified balance sheet. So the last requirement is the preparation of the classified balance sheet. The last requirement is the preparation of the classified balance sheet. So the last requirement is the preparation of the classified balance sheet. So that will be the balance sheet after 31st December 2009. Balance sheet after 31st December 2009. So we start with current assets. So we start with current assets. Okay. So for current assets, we have account receivables. Account receivables. We have account receivables, which is 27,500. And we also have prepaid insurance. We have prepaid insurance, which is 15,000. And we have supplies, which is the same as stock. And then the value is 10,000. And then we have cash, which is 50,000. So you sum up these four figures to get your total current assets. And then summation of these four figures will give us 112,500. So after getting your total current assets, we proceed with non-current assets. Non-current assets. And then from the question, the only non-current asset that you were having is the video equipment. So video equipment. And then the cost for video equipment is 525,500. So that's 525,000. That's the cost of the video equipment. So after recording the cost, you less the accumulated depreciation. But in the trial balance, although we have an accumulated depreciation and then depreciation expense as well. Whenever you see accumulated depreciation and then the depreciation expense in the same trial balance, it means that the depreciation expense has been already added to the accumulated depreciation. So there is no need for you to add the depreciation expense to the accumulated depreciation again because it has already been adjusted for already. But in case you verify in the additional information to calculate for depreciation expense for that one, they are yet to adjust that, so you add it to the accumulated depreciation. So let's accumulated depreciation. And then the value of accumulated depreciation is 70,000. So the difference will give you the net book value for the video equipment, and then that will be 45500. So this prices will give you the total asset. So total asset, and then that will be 567,500. So after getting your total asset, we proceed with liabilities and shareholders equity. So we have liabilities and shareholders equity. So liabilities and shareholders equity. So we start with current liabilities first. So current liability. And then for current liabilities, we have account payables. Account payables. And then the amount for account payables is 37,500. So 37,500. And then the net amount is, the net current liabilities is salary payables. So you call your salary payable. So salary payables. And then the amount for salary payables is 7,500. The amount for salary payables is 7,500. So summation of the two will give you the total current liabilities, which is 45,000. Okay. So after getting your total current liabilities, we proceed with long-term liabilities, which is the same as non-current liabilities. So non-current liabilities. So in the question, we were told that note payable. We should assume that note payable is long-term liability. Note payable is long-term liability, so we treat it as a long-term liability. As note payables. And then the amount for note payables is 175,000. So 17500. So total current liability plus long-term liability will give us total liabilities. So total liabilities. So total liabilities will be 220,000. So because of space, we continue from this side. So we are done with the total liability. So we proceed with the shareholders equity. So shareholders equity. Okay, so first item that we report is common stock. which is the same as shares, or which is the same as stated capital. So common stock. Then the amount for common stock is 225,000. So 225,000. After that, we record the retained earnings. That's the closing balance. That's the balance for retained earnings that we had from the preparation of the income surplus account, which was 122,500. So retained earnings 122,500. So the total of the two will give you a total equity. The total equity. That will be 347,500. 347,500. So you add the total equity to the total liabilities to get total liabilities and then shareholders equity, which is the same as the capital employed. So that will be total liabilities and shareholders equity. That's 347,500 and then total liability, which is 220,000. And then that will give you 567,500. So you can see that this is equivalent to the total asset. So that's how we prepare a classified balance sheet. So this is the format of preparing classified balance sheet. So on this note, we have come to the end of today's session. See you in the next session.